Good morning, traders. We're going to talk a bit about the dollar, which keeps on suffering. EURUSD reaching new elevated levels, new 2020 highs. And of course, we're going to talk about gold, crude oil, and all the stock market indices. This is the weekly market update with me, 𝗿𝗲𝘁𝗵. All right, good. So let's just get going here. So you're looking right now at the euro versus the USD, and the market reached a new 2020 high here in the new month in the overnight session, and we come quite a long way. Remember that my general idea was to buy around these levels and then just try to push this up towards just below this level. And if you got that first move, then you know that's actually good work, even though the market continued to trade higher. And of course, a lot of investors and traders always beat themselves up that they didn't get the whole move. But it's difficult to get the whole move. And we were within the range, and we could have easily just pulled back, but we're not really in that range anymore. Instead, we're sort of guided by some sort of a channel, if anything. And, you know, we are around the upper levels of this channel. So I would be cautious about buying here. And I will be buying on dips if possible. So if we look at this today, first thing we need to do is identify the trend defining level, which is the last low in this 4-hour chart. Well, in this 4-hour chart, we can clearly see it's 117.53. So you take fib from the very low to the very high, and you can see that these are the different levels. And we will probably look for at least a 50% correction. We do have that channel, and those trend lines kick in, I think slightly around 118.30 or something like that. So the whole area here from this level down here, that is what is interesting. Is this going to stop the price from going higher? No, it doesn't have to stop the price from going higher. But given the information we have available here, it is the best time to, it is better to wait for a bit of a pullback. Now, obviously, the long-term consequences of the Federal Reserve's action is that it's going to weaken the dollar, and this is really what we've seen priced in here as well. We've seen, for example, pound dollar going up, pound yen going up, and a few other things that are sort of risk on. If you take a look at this, for example, this is the Aussie dollar, which we also had a bullish view that it was to buy around the lows and then just trade this to this high. But this market really sort of got going here on the back of these news. So this is the Aussie dollar versus the USD, and here as well, we sort of moved quite a long way without any big correction. You can, of course, if you wanted to, you can always just go use the 30-minute chart and then try to sort of follow the different lines like that. But it is something you can do. You know, some people do that successfully. My preference is to wait for a healthier pullback and then get involved, like the one I said here, because that works more for me. It's less intense. You know, I just wait for the pullbacks, and that's when I trade. And this is the Aussie dollar versus the USD. So we might come down, say 72, 75, and from that level all the way down to 71.92 or so. It should really have some sort of reaction here. And for now, the trend defining level remains at 71.33. Here's the GBP versus the USD, which has just been on fire here as well. We talked about buying here. In fact, we've been talking about buying dips for a significant amount of time. In fact, as long as trend has been bullish, I have been bullish most of the time. And here it just keeps on trading higher and higher and higher, despite the risks with Brexit and all of that. But I don't really care too much. I think at the end of the day, I mean, it's good that it trades higher because, in fact, I bought a pound yen, and I made a really good return on that. So this is good. But what I mean, I don't really care so much about Brexit, at least not when you're trading just for a few days. Then that doesn't really matter. Now, this is the weekly chart. There's some interesting stuff happening here where the market is, you know, trying to break above these levels here. And this is not any specific pattern, really. The market did indeed trade lower here on the weekly when everything just got a bit chaotic. We can, of course, maybe interpret it as some sort of a range. There are different ways of reading into this. Should we treat these two like a double bottom, like big range? If it is like that, then, you know, we're going to add another 1,400 pips to the upside. Maybe that's going to happen. Maybe more realistically, we just trade up to the next high. It's really typical when you take out a high that we go to the next set of highs. So that is really what I'm looking at right now, maybe 140 on a sustained break to this level. Now, if you zoom back now, if we go back to sort of more realistic levels, we have gained quite significantly. There's no question about this. Now, what we can do here is that if we're always going to wait for a very strong correction, we might not get an entry, but the big picture trend is bullish above this level, and that will be sort of, we can't cross below this level. And then you have these highs here. This is the Fed rate day, or the Fed when we had that meeting. And hopefully we go down here and we can maybe tighten this up significantly. So maybe we can work with stops instead of 30.50, maybe 31.13, possibly even 31.54. It depends what happens when it's going down. If it's really being so just taking out a bunch of levels really quickly, so we click it down here, then obviously we don't work with the stop here, maybe down here. It really depends what happens when we come down, how forceful the correction is whenever that happens, because we will have a correction at one point. I just don't know if it's going to happen now or not. And what if we don't have a correction? Can it continue to gain? Of course it can continue to gain. You can just look at something like the 30-minute. You can see we're going up, and we could continue to go upwards. But again, this is not really what we do in this presentation here, going that short term. So I'm looking for a pullback. Alternatively, you'll create a nice little pattern up here we can work with. All right, here's the dollar versus the Japanese yen. And I think the last time we spoke, the general idea was to sell around these levels with stops above this level, and then for this to come down. It didn't come down, of course. We're now sort of still within a range, and it's still quite boring, but we did come down in reference to what I mentioned to you guys. I think the original, and we're within these two different levels here, and a triple bottom. Now this is a beautiful rectangle pattern. You can even interpret this like an ascending triangle, which would be if you decide to put that line there. What's interesting overall is that if we take out these levels, we can add another 187 pip move. And what's also interesting is that as long as you do trade below this level, which we mentioned already last week, I think we can go lower. So if we go up to 106.40, 106.24, I think people are going to sell, target the lows. And if we take out the actual low, we'll go lower. First target will be 104.20, that level. All right, New Zealand dollar versus the USD. It's also doing very, very good. And yes, moving upwards. It's always a bit tricky with these ones because it went in a bit of a bearish channel and then sort of switched and turned bullish, which is obviously, I mean, it's interesting, but I mean, it's not interesting at all. In fact, it's super annoying because you don't have that push and that bit of correction and then upwards. That would have been easier. It just went straight up, took out the levels, and then you're like are you in a bull trend or are you in a bearish trend? Of course, when you look at something like the Aussie dollar versus the USD, it was easy to say that we're in a bull trend. And in the Aussie USD, I already had a bullish view. So there's no reason to actually engage in New Zealand dollar versus the USD because they sort of were heading towards the same levels anyway, or same direction anyway. So yeah, what can we do here now then? Should we do anything? No, I don't think we should. You have this level here. You have as well this high here and this high here. I think if we take fib on this, yeah, that will be the third fib. So we really shouldn't trade much lower than that level. Doesn't make too much sense. And I would just be looking for maybe a Fibonacci first to the first fib here, and then maybe from here looking the bottom out. All right, here is the dollar versus the Canadian dollar, where the trend is bearish below 132.50, and I think, well, we need a correction here as well, and that's really the end of it. This is an amazing spot to book profits if you did sold over the last couple of days and weeks. And dollar 𝗿𝗍𝘃 is really trying to break lower. My general idea has been just to sell up here. We reached take profit levels. That's all good. Obviously, with the dollar yen going, not the dollar yen, but the yen weakening against the pound and the Aussie and things like that, you know, this is really struggling to trade significantly lower because it really wants to push higher, like, again, the euro yen or pound yen, Aussie dollar yen. But if we trade below here, we should realistically just come down. Gold prices. Gold prices are bullish about 1848, or it's just bullish above this level. And we took out this trend defining level. And for now, I'm hesitant, but I'm going to be bullish. That's what the trend commands from me. So I'm focusing really on the short term now. And I'm not allocating any money to this one. But if you do want to push, if you do want to turn bullish, then it's really from above 1948. And I want this to go up, and could potentially go up like this. I did have an entry order in silver. Silver, I'm finding that actually far more interesting. So on the daily chart, you can see this is an ascending triangle. I need to put on the daily chart because if you look at it from a different perspective, you're not going to actually see it. But this is an ascending triangle, the upward trending line, and then you got these highs. Now, if you look at a 6-hour chart or 4-hour chart, which is where you should look like, it doesn't look like an ascending triangle. But we had the little push here, and in fact, I had a limit order on to buy. We were here, I think, and I wanted to buy a little pullback, but didn't go low enough. But yeah, it's definitely bullish. The ascending triangle itself suggests we can go up to 30.53, and this is where I will put my money if instead of gold. And if we're lucky, because something can happen, someone might say something, we'll have a correction down towards support. That will be 28.14, and then as long as you trade above that level, I think we can head upwards. All right, here are gold price, crude oil prices. So last week we said people are gonna be buying from these levels, and we did indeed go lower, and then we went upwards. The trend defining was never triggered, and then we went pretty much back up into profit, and then we came back down again. Now, obviously, it's been a few days since we spoke last time, so I have been working with my outlook, and my latest outlook, which I updated yesterday, is just to be bullish above the same level, more or less. The only thing I did is I pushed down the stop level by a few cents to 42.21, and the generally we can go up to 43.50, and then possibly 44, and then 44.50. German DAX is bullish, and the idea has been just to buy around these levels, and there's really no change here. The only thing I changed a tiny bit, I think we just increased the buy area a little bit since we spoke last week, but there's no change overall here. We're dealing with an uptrend. It's obviously super sluggish. This is not your NASDAQ 100 trending upwards. It's ultra sluggish. There's nothing we can do about it, by the way. We just need to be patient. All right, this is the Dow Jones. The Dow Jones did go down to my buy spot. If we go down to 28,353, then this is going to be bullish. I'm bullish from here and here. I mean, in fact, it's already bullish. It's just that the risk-reward ratio is better here. NASDAQ 100 is just going up and up and up and up. Now, again, a lot of people beat themselves up. Obviously, if you're short, yeah, okay, you can be a bit upset about yourself. That we are in the. Just remember that 2020 was just the year of trend followers. You did have a big slide to the downside in the markets in the beginning of the year, but even there, the trend was so persistent to the downside that you could sell and make money, and then the thing turned bullish, which made perfect sense. We got all the central banks printing a lot of money, and then you have all the fiscal governments pushing fiscal stimulus. Like in any textbook, if you go back, if you just study history, the markets always go up, and they didn't do a small amount like they did in the past. They did like huge chunks. I don't remember how much it was, maybe 17% of GDP or 20% of GDP in the US. It's some silly amount, and that's why we're going upwards, and we are on a trend following trend here. So you have a lot of people just getting involved because it's just going upwards. The time, the year to start to be betting on the market to become range bound is not this year, not right now, and this will come crashing at one point. But guys, just to let you know, the average retail investor, what you read on Twitter, I'm saying this, I said this before, is you don't want to be, you want to watch what people are saying on Twitter. But it's interesting because there's so much hate against the NASDAQ 100 because the majority of Twitter experts, people just on Twitter are just ultra bearish, and they don't get this. They don't get what we're heading upwards. And yeah, maybe they'll be right. Maybe there's something wrong with Tesla. And yeah, there's probably, we're up with about 80%, 81% from the lows. But the average retail investor, unfortunately, loses money, and we know that because all the FCA regulated brokers have like a little thing on them where it says that they lose some 75. Even on this one, you'll see here, 75% of retail traders who trade with this or ATFX lose money. And why is it like that? Because the average retail investor likes to just do the opposite of what you'll be doing. So what they did on the way up, yeah, some people shorted here, and yeah, they made a bit of money, but from pretty much, I think from February all the way up until March, they were pretty much long. So they were long on a net average position, and then we went up, and then here around March, say April, from April, effectively, they have been short. So the person that is on Twitter now and just sort of, you can see it. You can see some people that put some tweets up, and then you got like 500 likes just because someone said something witty about how Tesla is so much more overvalued than I think General Motors and a bunch of other companies, right? Oh, but it's true. But even if you have 500 people, like thousands of people agreeing with that, the market at the end is right, and it's just been pushing upwards, and the market's up with some 63%. And again, the average retail investor is losing money on this one. So, long story short, it's the year of the trend followers. It's the time to be bullish. The market's just going upwards, and we need to go with that. There's a time, like last year, which is a rubbish year, and even the year before that, where following the trend was a horrible strategy. Not horrible, but it wasn't an easy strategy. I think from 2019 all the way up until the end of the year. So from this section here, really, I mean, it was not super easy. I had a very good 2018. I mean, I think 40% return or something like that, 39% return on that year, because it was on the heels of that uptrend. But then from sort of end of 2018 up until November here, we were stuck in a big trend, and it was, selling against the highs was a terrific idea. Being very short term with your money was a terrific idea. Today, just going with the trend is a terrific idea. And this is ultra bullish. Now, I've been looking to buy a dip, or saying to people to buy dips, and I insist on that. The last very good idea I told people was to buy, I think it was here. And yes, we went up towards the targets, and that was really good. And then, of course, you can switch. So I started to buy pound yen and Aussie dollar yen, and I actually got out of those already yesterday, which is the same move. So you don't have to just trade the Nasdaq 100, but yeah, it is a bullish trend. What do we want to be doing here? The thing is it's moved so much, and from a risk reward ratio, I don't agree with buying here. Doesn't mean that it's going to stop. Now, if you want to trade this in the very short term, you could focus on a level like this level here, which is 11,835. So if we go down maybe to 12,065, people might potentially be buying. Otherwise, you're looking for a bigger decline, maybe down to 11,640. And then from here, trying to rebuild a position. S&P 500, here as well, I'm just looking for a pullback. This hasn't really moved too much. If we get a 50% pullback, I think that would make a lot of sense. And I think that's pretty much it. Yes, before I forget, let's take a look at the economic calendar. By the way, we have a new economic calendar on the InvestingCube website. You really want to check that out. It's the best stuff you can get. And we have some data out this morning. The PMI manufacturing from the UK was slightly worse than expected, but the pound is quite bullish today. And what you want to keep an eye on is later today. On 2:45, we have the manufacturing numbers from the US. Anticipated outcome is 53.6. Sorry, so I'll take this back actually. I think this is the second update. Sorry, the market are good. They were published last week. Is this one, which is the fresh one. It's the ISM manufacturing index, which is very similar to this one. And this is the one you want to focus on. So it's anticipated to increase to 54.5 from 54.2, higher than expected. Gives the things like Aussie dollar yen, CAD yen, pound yen a bit of a boost. It might also definitely give stock markets a bit of a boost. The question is, how's it all going to react? Normally, when you have good data from the US, you'll see the dollar strengthening, but it's not that type of market right now. Is sort of, oh wow, the US is doing good, so like all these other downbeaten economies are also going to do good. That's how they look at it. So anything with a bit of risk, like the Aussie dollar, might go up a bit. I don't know exactly how to. I wouldn't trade on this number by itself though. It's always has to be in combination with whatever we're looking at. So for example, the Aussie dollar is at the high. So even if this number is like really good, I wouldn't be trading it because we would need to have that pullback. But for example, maybe something like the German DAX would have a nice little boost on that happening. Okay, guys, let's see if you guys have any questions. Otherwise, I think we're going to wrap things up. Let me go to the YouTube channel. As well, before I forget, we do have this free trading course. Just click on Learn to Trade Forex trading course. You can learn more about it there. German DAX would have a nice little boost on that. Okay, so we have Stefan saying, hey Alex, hey, hope you're doing good. Maurice as well, good morning to you. Stefan says, dollar CAD just breached below 130. I'm thinking of closing all my shorts from April. Do you think this is reasonable? You know that I think it's reasonable, Stefan. I've been telling you to short close positions for quite some time. Yeah, I know what you mean. Yeah. About the dollar CAD, so in regards to my short-term view on the dollar CAD, I do think that just from a very ultra short-term perspective, like if anyone would sell today, you know, they would be ready. They would need to be ready to have a significant correction, which could eventually potentially lift us up here, and then we need to see how much lower can it go. I think it has limited downside. So this, I think, would be a good opportunity to book profits. However, though, no, I would just book. Like we have, as you say, it's a bit of a round trip. You know, we went all the way up and then all the way down, right? Now, there are some currencies like the Aussie dollar, which are trading at new levels. You know, they did trade above its December high. And then you have dollar CAD, which is trading below its December, could potentially reach below here. And you know what? It wouldn't surprise me if we do that. But again, it's just about that residual ratio for me, and that's not there right now. We're so close to support, you can have a big reaction. Hopefully and then when we come up, we can decide to sell at higher levels. Yeah, what I mean in general is obviously about the round trip thing here. So I don't disagree with this one. It was a massive move and then came down. But the thing is that to some extent in stock markets, everybody saw that it was a bearish market. Someone could have sold there. And here as well, I wasn't paying too much attention, guys, to currencies. I mean, I was watching them every day, but my focus was mostly on stock indices. And what was happening here is that we were going up and up and up. So people had some sort of opportunity to react. And that's really what's important with trends many times, is that it's quite ingrained in everyone's mind now that the NASDAQ is bullish, that the dollar is being weakened. So because it always takes time to not always, but it takes time really when it's a special situation now, like gold, for example, where everybody is bullish. And everybody knows that if you would buy, you would ultimately make money at one point. And that mentality, when we get stuck in that, we had that on the way up and on the way down in currencies, right? And that's what I wanted to say with like a trend follower. Because in a way, with the NASDAQ 100, it was ultra bearish, right? So you could just sell and sell and sell if you wanted to, because it wasn't a clear downtrend. The world was going under because of COVID-19. You get the point, right? And then we go up, and then suddenly it's like, all right, stock markets did overreact on the way down, so they're probably going to overreact on the way up. And and then they need to come back to some normality, which they did, and then they continued and overreacted to the upside. Okay, good. We're going to wrap things up. Guys, don't forget to hit that like button. This question forward is down here. And if you're new to this, don't forget to hit on that subscribe button and on that little bell here. And I'm available on Twitter. So my handle is AlexFX00. That's my handle. You can check that out. as well. Don't forget to check out the premium course. It's on Investing Cube. You also find news on Investing Cube, so you can check that out. All right, guys, have a great day, and I hope to see you guys very soon on Thursday for the next market update. Thank you, and bye-bye.